the max allocation for these accounts is 5, but it doesn't matter. If you pay attention to the things that I post, you would know that Top Step pretty much gave me 4 NFA accounts, and these accounts were previous accounts that I did have that were pretty much past, but due to a server outage around that time, I believe in December, when I had the accounts, that server outage pretty much caused me to lose my accounts. Uh, and Top Step pretty much restored them. They restored the accounts, gave them back to me. I was able to pretty much start over on a fresh new batch of evaluation accounts. And what I did for these accounts, if you go back to my previous videos, I traded all 4 of them on silver. 75% hit rate on silver, passed pretty well, made the first 1500 off of silver, catching shorts on that day where silver was just falling out of the sky. And then after I made a 1500 buffer on 3 of those accounts, I tried to go back in with the 4th one. Fortunately, the model didn't uphold, ended up losing that account. But the 3 that I did have, I just been copy trading them all the way up since the time that they've been activated. The start date for the accounts was the 23rd, and it's been about 11 trading days, I believe, with these accounts, because I can't really go back and check them anymore. But yeah, days traded, so took 10 days. From the day that I received accounts, I traded these accounts for 10 days, 10 trading days, not going by the start date and where we finished, but the trades that I actually took in the accounts. So made sure that the consistency was under that 50% mark, 59.5%, 1,595.42 on the day, and target goal is 3K. So you can see that there is no huge dips in my equity curve. It is pretty consistent for the most part, going through all of the evaluation accounts. They were all copy traded, so the curve is pretty much going to be the same going across all of them. Shouldn't be different. So steady equity curve, really no losses, really maintain about an 80% win rate with all 3 of these accounts together. So 80% win rate when it comes to my trading capabilities, possibly only taking like 1 or 3 trades, holding those trades for longer exposure, of course, because I am more so swinging, and we were able to get that done in 10 days. So with that being said, I no longer have any combines. Look, all those combines are gone. So now I have 3 in my back pocket. I've already been trading 4, received payouts out of all 4 of these accounts here, building a buffer of 2K per account, so 2468. We have $8,000 in funding, and then we have another $6,000 in unallocated funding because of the fact that they are no longer combines. The funding that you receive is not 50K, it's the 2K that you pretty much use as your DDL, your allocated maximum risk. That's what you have access to. So in total, we pretty much have over 16K in funding. 8 accounts times that by 2, that will give you 16. And the fact that I have 5 now, because we're about to activate one of them, that now leaves me with 10K in funding. And yeah, so I'm about to eeny, meeny, miny, mo, and activate one of these accounts. So we'll do the one that got passed first, which was pretty much, let's say this one. This one started first. So let's activate this one. Congratulations, you passed the trading combine. Activate express funded account. Now, I know this is something new here that they added with XFA standard and XFA consistency. To me, XFA standard will always be the best with me. Yes, I do understand that you have to trade for at least 3 days since your last payout, while here you have to have 5 winning trading days. you must have at least 5 trading winning days where your net profit is greater than zero. I've honestly always been trading like this. I've never had a problem with it. Um, I don't see what the problem is with me not taking out anything above my buffer. But I honestly like the XFA standard. The payout cap here is 6,000. You have a 40% consistency target. So I honestly do not like having consistency targets on my trading account. I really don't honestly care if I get to, trade 3 days and receive my money. I'm usually trading for the entirety of the week and not closing out until after I'm done. So to me, I feel like still having the XFA standard is worth it, rather than me having a percentage cap on what I'm capable of making on the day. I would rather be uncapped, So the standard to me is still the best. I don't understand why I would want to cap my income. It was already 1,500 when you're trading the the combine. So I wouldn't want to set a cap on myself on the day just to get my payouts quicker. Honestly, makes no sense to me. So we are going to stay with the XFA standard and select that. Now registering the account. I agree. Assign activation fee. There is no activation fee. And there we go. Your account begins with a zero balance, which allows you to keep track of your profits and losses as you work towards payouts. The buying power is the same as your trading combine account size, and have 5 or more winning days of 150 or more, and you can unblock up to 50% of your profits. After a payout, keep your balance above last payout balance, qualify for your next withdrawal. So good trading can be born. You don't have to go at it alone. Top Step TV, all that bullshit. I'm not trading with Top Step TV. But there we are. Express funded account is now activated. And when we head back over here, we now have our ICTK count. So ICTK till I die. This account has always been a standalone count. So these accounts are now going to be synced back because I no longer have any combines. We are now full. So now it's time for me to pretty much move on to a different firm while I continue to trade these to make me money. And I guess we can have a little bonus special here, and I will go more so in depth to Wednesday's trade model. Everything that I was able to see and identify with today's trading, and hopefully in the study of this, you can understand how I was making money today to pass these combines while keeping a 80% win rate. I believe you're able to see that in my cord right here. So this was the passing of the last account, even though all 3 of them were synced. So it doesn't honestly matter what account I show you. They all have the same money being made on the day, lowest money being made. They all had the best day of 1,500. The worst amount of money I've ever lost on a trade was about $380, and we went on a 7-day profit streak. So 7 out of 10 of those days that I traded, 4 of them were losers and 7 of them were winners. Well, 3 of them, my fault, were losers, and seven of them were winners. So was on a profit streak, was not losing at all. Very clean trades, clear cut, direct, nice models. I can honestly say like these 2 months of price action for me have been lovely, not because of their deliveries half of the time, but how I manage my trade positions in the price action. So it rewards me in a sense. But yes, was very, very nice being able to, utilize these new accounts and, pass them without blowing them, and receive, the rewards, reaping the rewards of your benefits from doing the right things, really. So now I'm gonna just get straight into this, I suppose. I honestly wasn't expecting to be doing a call, but really it's already here. It's still left on the chart, so why not just go over it? So again, one of the things that I'm always teaching people is that price is fractal. Honestly, doesn't matter what time frame you're on when it comes to understanding uh, where we are more than likely to deliver. With price pretty much being the same thing on the lower time frame, you're just seeing fractals of it. Should be no reason why it makes it hard to understand where Tuesday's high and Tuesday's low, or the low in between our range delineated from 0 GMT to 5 p.m. Wherever you find the high and the low within this range here, in this zone, after midnight, that is how the algorithm pretty much works. That's how price books. You notice that the highs and the lows of the day are formed intraday, and of course the tops and bottoms are formed throughout the day. More than likely after 9:30, that's when you start to get your true delivery on price, and that's where we actually see the Judas swing and things of that sort. Us rallying, making a higher high, and the market never comes back up to that high, and then making a lower low. And now we have the high of our trading range being marked off at 25,465.25, and the low of our range representing data lows here at 25,058.25. So let me change that, put that here, copy these coordinates, update these coordinates, and this is our data high and our data low. So that is our data high, and this is our data low. It's already marked with the OHLC indicator that I'm pretty much using, and this already comes on the charts. If you want to use price lines, it will identify the high and the low of the range for you. So I leave that on there so I know exactly where my high and low of the range is, and that's pretty much it with that. It's just a price line. It's pretty much all I'm using. It's just time and price. So going into Wednesday's trade model, I'm going to go over pretty much every piece of delivery that I identified with London session, well, Asia, London, and New York, because I traded all, I pretty much traded all the legs going off into New York, and then I was done for the day entirely. So this is pretty much what we had going back here in Asia. In this zone, in between the time frame of 8 p.m. and midnight, identifying our range within Asia. So notice how in Asia we pretty much swinged higher, driving higher, high, higher high, lower high, lower high, and we stab and make our higher high. Now from here, I was noticing that price was starting to flip, and we were relatively breaking down. The structure is changing. We have our failure price swing into that order block there, and we're expecting a continuation into the downside. So originally, the trade model was already showcased for me within Asia. So when I seen price pretty much breaking this low of our focused price swing heading higher, and I realized that that structure was flipping. In my mind, I was already visualizing that in Asia, we were possibly going to see a breakdown going off into midnight when we came up here to trade up into here in London. So when I seen that, this ended up being a 22-point trade idea and was looking for Tuesday's low to be rallied and targeted, which we ended up trading into overnight in Asia, and then continuing that PA in London and trading into Tuesday's low. So this was a 1 to 5 risk to reward trade, 22 points on risk, 125 points on target. And that trade completely smacked. And the very next logical level that I was looking for was 173 points, 1 to 8, pretty much, if you round it off. And we were looking for a price to pretty much trade into this bullish order block here that we had left inside the new week opening gap. So bullish order block, and the coordinates. So was looking for price to trade into that 25 point 50 level, which we exactly did here at 5 in the morning. And from there, price had a mad reaction, trading out of this level and forming the low. And we seen price shoot up about 305 points to the top side. So if I was to take a measuring tool, drag it from this low and pull it all the way up to our highest high here, you see that we pulled from here and rallied all the way up for about a 305 points. So 305.75, that 0.75 would pretty much be 3 ticks, 3 micro ticks, because it takes 4 ticks to make a point. So can't consider that to be a full point. It's 3 ticks. So we had 375 points and 3 ticks. And we seen our trade model pretty much forming at 9:30. So after we created this swing low here in early New York, this swing point here ends up becoming our focus draw on where liquidity could pretty much be swept if we continue to pan out bearishly on the day, because there are orders resting here. So at one point in time, this area here was representing the low of the day, and the coordinates for the low on this trading day at 5 came in at 125, 146.25. Now from there, dealing with the entirety of the range, looking at it from off of the 5-minute, this was pretty much our leg of structure here. Let me erase this because we're just focusing on the delivery in the morning. So we notice that we are above midnight opening price. So relatively, this is where the high of the day is going to be, right here on this up close candle that swept Tuesday's highs. This candle here at 8:55, we swept Tuesday's highs at 25.452 flat, and we pulled away from it. And at 9:30, that's when you notice we had our Judas swing. So we'll call this 9:30 Judas swing. And I believe ICT has touched over what the Judas swing pretty much is within his newer, I think 2022, 3, 24 mentorship. Can't remember exactly what batch of videos it was, but I know for a fact he talked about Judas swings and how you utilize Judas swings in price action. So the simplest way that I would put Judas swings is when the algorithm kicks in and we're trading into that 9:30 candles open, you would notice a lot of the times where price will give you a manipulative move either up or down before we get the actual draw on where it is that we're looking for price to go. So that is literally the simplicity of what a Judas swing is. ICT's Judas swing is a manipulative move either up or down. In this case, we are using that concept at 9:30 to get our manipulative move up first, which is what happens, and we swipe the high of Wednesday, because in this up close candle, this is the high of our trading range, which creates the high for Wednesday. But in the sense of us sweeping Tuesday's high on a Wednesday, you see how at 9:30 we sweep the high for Wednesday one last time, and we price the data high at 25,465.25 in our Judas swing at 9:30. So it's that manipulative move going up, that impulsive move heading up first, and then from there we see the breakdown. So Yes, you have things such as bullish order blocks and things of those sorts. And, price comes back into those bullish order blocks and mitigates orders to pretty much offload our longs and to get into new price shorts. So I understand that the structure in general is just flipping here. We do have, again, liquidity, pretty much resting and residing under those lows, though I am thinking about this order block here as a form of a mitigation block as well. Price is going higher just to pretty much send us lower. So at 9:30, we have that Judas swing. We sweep, we clear the highs. After we clean the highs, we see how we have a breakdown going lower. And 9:30, we open, we trade up, sweep, and then we expecting a breakdown, resting orders. We pull, we snatch down, we break a market structure, and then from there, price continues to expand. So now, what was a dealing range that we're pretty much dealing with here, that dealing range starts to expand because this low here now becomes the lower low down here, and that range expands. So every time we retrace and break out of this orange zone here, the whole entirety of the concept that I'm trying to get you to understand is that price is reacting off of what we've done back here, and we've already had our indication of the structure flipping. So if we are going to continue to make consecutive downtrends and the market's going to keep making lower lows and lower lows until we get down to where it is that we're actually targeting, which is, these lows all the way back down here, how are we going to get to those lows? Price has to show us willingness to, break structure, retest, create these supports, and then trade back off of these supports when we retrace and then break back down and break these lows. So as price is continuing to, make that downwards formation, we want to keep seeing every single bear candle's low get repeatedly trade through. So we do it here. We make another lower low, we retrace, and then we pull through it. Another lower low, we retrace, and then we pull through that low all the way until we get to the low of the day. So that created this whole range here. And this entire movement down from 9:30, where we had our sweep all the way down till we traded underneath the low of the day and then created a data low, was 407 points to the downside. Very clean trade. And from there, the delivery pretty much got very sloppy. I seen how we pretty much pulled down here underneath the low of the day. Well, the new price low. This no longer exists to be the low of the day because we made that new low at 1025. Going off into the next macro of the 10 o'clock candle, price pretty much traded lower, and then we rallied, traded into this 5-minute fair value gap here. And then from there, I was just pretty much just studying the delivery of what price was doing in this area, just accumulating orders. You can see how we're piggying back and forth within this range here, where price was accumulating orders and just getting ready to, make its next move. So though I was already done trading and there was really nothing left for me to do, I was just studying, what price typically is doing when we are consolidating. And of course, we have indication that structure is flipping because we have our ICT bullish order block here, or in other words, our ICT propulsion block here. And we had, sweeps, multiple sweeps going down into this order block here on the 5-minute, and price upheld in the order blocks range, and we seen expansion breaking out of the consolidation here and sweeping this short-term high here completely. So nice little possible buy model there. Overall, price ended up giving you one last opportunity to catch a long from here. Once we broke, the high of this range, about another 117 points, and there's nothing here for me here. That was pretty much the entirety of the trade after price delivered in this range. Going off into the close, all price literally did was continuously just topple these short-term highs here, and then we just continued to span, higher, retracing, even though the overall structure is still bearish. We're still in between this bigger range from this high down to this low, and dragging that across. That is the entirety of our trading range. So price is doing nothing again, besides trading internally from one range into another, when really we're dealing with one big overall range to get to these longer um, range buy side and sell side areas of liquidity, because again it's internal and external structure. So in order for us to get to the external structure, which would be the outside areas of this peach color range, price has to expand and trade into that direction while we're inside of that range to get out of it. And pretty much what you're doing is studying the delivery of price while it's within the range, uh, and catching the move while it's in the trading range to snipe out of the trading range, or the small internal fractals of it. uh, and that's pretty much what was going on for this trading day. um, that was everything that I pretty much seen. I pretty much caught nothing but sales. Caught sales in Asia, um, a 1 to 7 trade idea, and then caught the shorts all the way up here in London. I mean, New York. It's open, which was a 1 to 5 to 1 to 7 trade idea as well, and pretty much still holding based off of this structure here, that we're still in a bearish market. And another thing that I like to do is just highlight that price action on the higher time frame, because when you go on a higher time frame, you start to honestly see the type of structure that you're dealing with. So honestly, we just been ranging back and forth, and I'm understanding how we deal with these ranges, what to look for, how to get out and exit in my newfound liquidity. When the market is in my direction, in favor. So to the untrained eye, this looks like a very sloppy delivery to the downside, and of course going up. In reality, we're really not going anywhere. But to the trained eye, there is nothing but opportunities and moves in these rangy markets, to where you know exactly how to deal with them. So I hope you guys enjoyed. That's all that I have for you to get today, and good luck with your trading.